You are listening to chartingwealth.com for Friday, the 9th of March, 2018. Chapter 8, we're going to be putting that out on Friday with the comprehensive review and forecast. And again, this is the minor indicators. We're going to go over things like the derivative oscillator, the Bollinger Bands, moving averages, how we use the exponential and the simple moving average, all sorts of good stuff. If you're interested in Chapter 8, this is the way you're going to get it. You're going to need to be a subscriber. So if you're listening today and are not a subscriber, simply go to chartingwealth.com, put in your name, your email address, and we will have the link for the video and get it to you in the broadcast that we put out over the weekend. That is the comprehensive review and forecast. Of course, along with all of that, you always get the links to our daily market worksheet, our weekly market worksheet, and the trade worksheet, which we tell you to fill out all the time. That daily market worksheet every day, except, of course, for the weekend comprehensive review and forecast, where you fill out that weekly worksheet. And for every trade, you do the trade worksheet. It creates your trader's Bible, your trader's diary. It is really where you put pen to paper, you keep up with what goes on, and it is where the real magic occurs, where you really understand and learn and see by doing how to actually read a chart. And my friends, when you can read charts, the world is your oyster. When you can accurately trend follow, then of course your dreams come true. Now, let's jump into these charts. What do we see going on? The S&P 500 up for the day, 0.48%. We have a market that's sliding sideways. That weekly, we look at the weekly PPO, it crossed over with the weekly vertical crossover going down all the way back on the 9th of February, up that following week, and then up the second week ending the 23rd of February, and then March has been down. The prior week ending the 2nd of March was actually a doji tending down. It's a red doji, which means, of course, lots of indecision tending down. So far for this week, our Heikin Ashi candlestick is showing us a red spinning top, which again means indecision, not as much as the prior week, but tending down. We see that the price percent oscillator is still heading down slowly, not quite flat, and we see the derivative oscillator is about steady. So again, even though it was an up day, as we look at the price percent oscillator, we want to see some movement. These sideways slides really start affecting the accuracy of the oscillator if they go on and on and on and on. This market does not want to move up. In fact, what we see is that it wants to move down since the legs were kicked out of it. We also, just for your enjoyment today, we added that middle Bollinger Band. We typically don't show that. I decided to drop that in today, and we can see where we reached all the way down there to the middle Bollinger Band and sort of bounced off of it, and some of the retracements have touched on it. We'll just continue to watch and see what happens. What do we see on the 2-day chart? Well, it is still negative, just barely on the derivative oscillator. Price percent oscillator appears to be heading up, trying to cross over. Prices crossed through that weekly, and again, we haven't really finished drawing the weekly candle yet, but where it ended on the day on Thursday, price has pushed up through that on the 2-day chart. 2-day chart is still negative. See how Friday wraps the week up. On the 4-hour chart, of course, it crossed over in the afternoon, heading up back on Wednesday the 7th, and we saw on Thursday up movement in the morning and the afternoon again up, not quite 0.5%, 0.48%. So we'll continue to keep our eye on the S&P 500. What do we see with the Qs? Well, that's up a little bit more at 0.55% going into actually the 4th week of up movement. Now price has pushed up, at least on that weekly chart, through where it started moving down on that big drop. Remember, the Qs is the Nasdaq 100, the tech stocks. And we also are getting very close to a crossing over going up after we've seen the price percent oscillators sort of oscillate, not very accurately moving around. Derivative oscillator still very negative, but losing some of that negative momentum. You can see how long that big down move has really affected the derivative oscillator, just as it's just still as negative as it is. As we look at the 2-day chart, you of course see the 2-day chart for the last day and a half, strong up movement, had a crossover going up on the 7th, the candle ending on the 7th, and then of course the candle for the 8th. It's only that first half of that latest 2-day candle is of course showing up strongly also. Derivative oscillators in the positive, price percent oscillator of course heading up. And as we look at the 4-hour chart, 4-hour chart crossed over going up right about the same time that the 2-day chart did. Saw up movement in the morning, bit of a pullback in the afternoon. Some of that exuberance was lost. And again, as we look at price movement, sort of retraced where it started moving down back on the 27th. And it sort of retraced to about that same line. So we'll sort of see what happens. We can see where things bounced off the 50-period moving average, actually, well, penetrated through it and then bounced back up above it, starting on the afternoon of Friday, the 2nd of March. So that's where we are as far as the cues go. Going to go back to our weekly chart and we'll move on to TLT. And again, TLT sort of, again, sliding sideways, unlike we saw on the stocks, particularly the S&P. We can see that it's sliding sideways with first a spinning top and then a doji, but those are green. So again, tending up, sliding sideways. Derivative oscillator still very negative. Price percent oscillator still heading down on that weekly chart. As we go to the 2-day chart, we can see where things changed over on the 5th. 2-day chart had a crossover going up. And again, can't really even draw a trend line at this point because of just the sideways slide. The first day of this latest 2-day candle is a green up candle, but again, more like a spinning top like the past 4 days but prior to that 2-day candle ending the 5th and the 7th. So again, sort of bottoming out here potentially. We'll just continue to watch with TLT. We had a good run since we had that weekly vertical crossover back on the 9th of January. Things went quite nicely down. And again, remember, if you've not taken our training on inverse ETFs, how to make money when markets crash, that's sort of your first introduction to what shorting the market is about. Whether you're shorting an ETF, that is, you're going into an inverse fund or buying a put. We talk about inverse funds there. Please listen to that. It's available at both our YouTube channel and at our website, chartingwealth.com. Same name for the YouTube channel, Charting Wealth. So we see that on the 2-day chart. And as we look at the 4-hour chart on 20-year bonds, we saw that it crossed over going up all the way back on the 23rd. We had up movement in the morning and in the afternoon. Both those candles had some down moves on them also. So again, trying to find its way to see if TLT is bottoming. Don't have anything yet for you. Haven't had a crossover on that weekly chart going up yet. If and when, well, at some point it'll go up, we will let you know. It could continue its down movement. Of course, it had a number of weeks of strong down movement, and that was a beautiful trade for us. So again, we shall see, and if it does rotate back over going up, we'll let you know. Lastly, we go to gold. What's gold doing? We're getting closer and closer to a weekly crossover going down. Looks like it might end the week that way. Had a down day, 0.24% down. And again, so far, we have a green spinning top for the week. But of course, our biggest signal, our major indicator is that price percent oscillator. And of course, it's crossing over going down at the same time the derivative oscillator is, which is typically a strong signal. And we'll just continue to watch and monitor. It looks like, well, we'll continue to keep our eye on that. What's going on the 2-day chart? It crossed over going down all the way back on the 7th, went up and then sort of sideways. And so far, the first day of the latest 2-day candle is down. We'll keep our eye on that. Derivative oscillator down, not as much as it was on the prior 2-day candle ending on the 7th, but the price percent oscillator is down harder. And then what's going on with that 4-hour chart? Well, it's sort of letting us down again, isn't it? It was crossed over going up and then just petered out and started heading down. The last 2 days are down movement. And again, like we talk about, when the 4-hour chart is trending, it's beautiful. When gold prices are trending, works over and over again, but of late we've just had some disappointments with that 4-hour chart. Maybe it'll turn around and bounce back up and recover itself, but to see that kind of retracement almost to where that first candle took off is a bit disappointing as far as the 4-hour chart goes. But remember, gold's up on the weekly, maybe getting close to crossing over, going down, 2 days already down. Be interesting to see if we have everything, well, we have the weekly and the 4-hour crossover going down at the same time. That'll be an interesting occurrence if indeed that does happen on Friday. We'll keep you posted. Remember, if you want our text service to give you a text and let you know when those weekly vertical crossovers occur, those are typically our best indicators for the most successful practice trades that you can do. And again, I say practice trade. Remember, we're not a stock calling service. We're an education firm. We do not give market advice. We're an education firm. We want you to practice with us and do all the training. But if you would like the text service that we have for free, you need to text to the number 33222, the word, one word, Charting Wealth. Those full instructions are available to you if you are a daily market review subscriber. And again, go to chartingwealth.com, sign up. In that email with everything else we have, there's also the instructions on how to get our text service for free. Now, again, that's only available for our U.S. listeners and viewers. If you are in Bahrain, or if you're in Australia, or if you're in, maybe Canada's okay, but if you're in South America, you're in Europe, it will not work. But guess what? You can just listen to the comprehensive review and forecast every weekend, and it's right there for you. So, thank you so much, my friends. God bless from the whole team here at Charting Wealth World Headquarters.